afternoon, traders, and welcome to Forex Focus, the show where we look at the opportunities that could be setting up in the FX markets for the week ahead. And in today's show, we've got a lot to talk about because the US dollar has been strengthening against pretty much every other currency out there. And whilst there are many good reasons for this to continue, we just want to highlight a few key levels that a couple of the majors are approaching that could trigger a bout of profit taking and temporary pause in the US dollar's advance. But before we get into that, we just want to clarify the fact that we're not saying that the US dollar is not going to continue to strengthen in the long term or even the medium term. All we're saying is that the dollar's gone a long way in a very, very short space of time, and the levels that it's approaching right now against the majors could trigger sort of like a temporary pullback in the currency, which at the end of the day isn't a bad thing because it gives us all an opportunity to get involved at much, much better prices. So without further ado, let's jump over to the charts and start by taking a look at the Australian dollar. So as you can see here, we've got three charts up. We have the 4-hour, the daily, and the weekly chart. Now looking at the 4-hour here, we can see that the trend is clearly down. It's broken through structure on the 4-hour chart, which it came back to and gave us a nice opportunity to short over here where previous support became resistance. The market's then broken down from there and it's consolidating at the lows. Now either the market's going to pull back and give us another opportunity to short, or it's going to break through this little consolidation zone here and make another attempt to get towards the key support level at 76.87, which we highlight here. Looking at the daily chart, you can also see we've got a massive downtrend here, and there's pretty much been no pullback from a daily perspective. And this is what we were talking about just a few minutes ago when we were introducing the show. The Australian dollar is coming up to a major support. If you take a look at this, the 76.59 level, it is, we'll zoom in here. It is a major support level all the way back in 2007. Which the market used as a catalyst to make an almighty rally. So if we go back 2007, where are we? Over here. So we're coming up to this level that it came back to in 2007. We saw that on the weekly chart, you had about a month of the Australian dollar absolutely falling off a cliff. And then zoom in a little bit closer. You can see that it then used that level to rally from 76.41 all the way up to nearly to 1, so 98.43 there. So it rallied a long way in a relatively short period of time, and we're actually coming up to that level again in present day. So as you can see here, even though the Australian dollar has been in a huge downtrend, it is coming up to this major level. Now we're going to see one of two things. One, we're going to see a temporary bounce. I'm not saying it's going to bounce 2,000 pips as it did before, but we are saying that it is going to have some sort of pause here, maybe a couple of 100 pips, a pullback up towards the 80 before it continues its downward move there. And if it doesn't do that, then we're expecting massive momentum move through this level. And the next stopping point is going to be the 70, the big round number there of 7000. It says 7010 there, but we'll put that in with the big round number as well. So the Australian dollar, even though it is in a huge downtrend, as are most of the other majors, it is coming up to one or two major levels, which we really want to keep an eye on in the week ahead. Looking across at the euro dollar, we have a similar situation going on here. So if I zoom out, first of all, you'll notice that it's actually broken on the weekly chart. It's broken a significant structure in the last week or so. So at 1.1611, it was a massive structural level. You can see here that this is a level that's held the market in place back for the last 10 years. So since 2005, it managed to break through that level the week before last. And as you can see, now it's approaching another major level at 1.0734, which again, like the Australian dollar, could provide us an opportunity to get in at a better level. So perhaps the market will use this level as a place to bounce from. So the people that were making money all the way down here, you can see on the weekly chart, there's just been no stopping whatsoever. We'll use that as an opportunity to take some profits, push the markets back up a little bit, which will then give us an opportunity to get short. So if the market comes down to this level and bounces in the next week or so, we'll be looking for it to retrace up to at least 1.1607 for us to take a short in the longer term. All right, looking at the New Zealand dollar very quickly. New Zealand dollar has broken structure on the daily. You can see there the 0.7603. It's broken structure there. We quite like to see it have a pullback to that level to give us another opportunity to get short on the daily, because we don't particularly like selling through the lows. All right, when you sell through the lows, when it's come such a long way in such a short space of time, we just feel that the risk reward isn't as good as it could be. That's not to say that we would never take those trades. They're just not our preferred trades, if you like. But the New Zealand dollar is also coming up to another big level. If we look on the weekly chart here, the 0.7098. So we've got a big round number there coming up to, and ultimately it provided support back in 2011. And it provided the catalyst for the New Zealand dollar to rally from 70 up to 90. So nearly 2,000 pips again. It was then capped by that high over here. And as you can see, it's coming back to that level. So quite a major level. We'd expect to see some sort of support at this level, if nothing else. I'll zoom in there for you just so you can see the price action as it's approaching. So we'd expect to see some sort of support at this level, not necessarily saying it's going to cause a massive 2,000 pip rally. We don't think that's going to happen in any of the pairs because the dollar is strong at the moment. We've got a divergence in growth across all of the major economies, and obviously the US is doing the best at the moment. So for that reason, we don't expect any huge reactions to these levels, but we do expect some sort of a temporary pause. Going across to the pound dollar, when it eventually loads, the pound dollar again, as you can see, approaching a major level. If we zoom out there, we can see that this level has been in place since 2013. The market used it for after that massive, I don't know if a few of you remember watching some of our videos back in 2011, but at some point over here on this big candle was a pin bar, actually on one of the other charts. So a little strange it isn't there. But anyway, we've got a bearish engulfing candle there, which signaled a massive sell-off in the pound dollar, which took us all the way down to the level that we're coming to now. And when it got to that level, you can see that it attempted to get below it twice before it then rallied off a good, where are we? So 47 up to 71, 72. So a good sort of 2,500 points there. And we're now coming up to that level again. So if we get to that level, we're completely expecting some sort of a pause or some sort of a pullback at that level. If it doesn't and it breaks through that level, the next big area we're looking at is a 1.4200 area, which is the support level from back in 2010. Okay, so as you can see, all of the majors approaching some big levels, and if it gets below there, we've then got highlighted on our charts the 1.3662, but we've got quite a way to go before we get there, so that's not immediately in our sights. Taking a look at the dollar CAD, the dollar CAD is just trading towards the highs. It really isn't showing any sign of a pullback. We can't even really get in on the shorter term, as you can see from all of these charts here. They're all trading towards a high. Every day it opens up higher and closes higher. We do like the dollar CAD from a fundamental perspective. We do want to get long this pair. We're just waiting for the right opportunity to do it. But obviously, once we do get involved in this particular trade, we're going to have our sights set on the 1.3089 level, which it hit at 2009. All right, so it's a huge level there. And if we look even further back, this is a level where the market has played with even back in 2004. So it is one of those levels that's in the market's memory. So we don't expect the dollar CAD to come up here and just smash through without any sort of a fight. We expect some sort of a pullback from there. But if we manage to get above that level and hold above there, then that's going to be a very, very good opportunity to get long. So that's something we're definitely looking at. So now on to a few different trades. So going away from the dollar for the moment, the pound New Zealand, looking at it on the daily perspective, we're seeing an opportunity to get short if the market gets up to this level here. So if it gets up to 2.1056, as we can see here on the daily, if you look at that on the weekly as well, it's actually a very, very, very big level. In fact, let's just put that level in there. It's a level that's been providing resistance since all the way back in 2011. So it's come there once, twice, 3 times. It's approaching that level again. If we can get up there and get an opportunity to get short, then that's something we're definitely going to be looking at. The pound Aussie, eventually, the pound Aussie is a little different. So it's come up to a major level, but it's actually broken out from that level. So it's going to be interesting how we trade this particular pair. If it holds above this level, then we're going to be looking to take it long. So if we zoom into the 4-hour chart there a minute, you can see that we've got a mini sort of consolidation zone going on at the top here. If the market holds above here and then breaks out above this consolidation zone, we'll be looking to take that long. If the market fails to hold above this level and closes back below, then we'll be looking to take it short. And if we do take it short, our sights will be set on sort of this area around here for a take profit. So 18654, we potentially could have quite a good risk reward trade on the table there. So that's something we'll certainly be looking at. We are at a major level. It looks like the market's broken above it, but if it fails to hold above there now and then closes below, we'll definitely be looking to take it short. The euro pound is a trade that we've been looking at. We're looking to take this short as well. The market has been trending down, as you can see, for quite a while now. The only difficulty here is that neither the euro or the pound look particularly attractive when you look at them in isolation, but I think you'd all agree that the euro's looking much weaker than the majority of other currencies out there. So this could potentially provide us with quite a nice opportunity to take a short with quite a good risk reward, because we'd expect this to continue moving down for quite a way, at least down towards the 72.41 level. So we could potentially have a few hundred pips on the table there if we get the opportunity to take that short. The dollar yen is forming a wedge. So it's rallied quite a lot in 2014. It's then found a high up at 121.94. It's then pulled back, and what we've got is sort of like a wedge pattern, a triangle forming at the top here. If we then get a breakout with momentum above this level, we'd be looking to take that long. Obviously, once we get long, we need to keep our eye on the 124.15 level, because that provides major resistance. But it is definitely one of the currencies that we're looking to get long in the next few days, few weeks. What we don't want, though, is we're not going to take this long if the market continues just to consolidate. So if it moves sideways and breaks this triangle, that's not really going to spell a good opportunity there. What we want to see is momentum above this level, and if we get momentum above that level, then yes, we're going to be all over that, looking to take that long. But it really depends how the market approaches that level and how it breaks through that level as to how we're going to play it. Now, for the last 3 currencies we're looking at, they're all the yen pairs, and they're all approaching major support levels. All right, so we're going to take the bounces from the support if we get down here, if we get the signal to get long. Or the reason that I'm highlighting all 3 of them is they're all sort of very, very similar. So they've come a very long way in a very short space of time. Neither of them are setting up just yet, but they all have the potential from a strong weekly level to give us a nice little pop to the upside. We're not looking for a massive pop. But if we can get down to that level and get a nice risk reward trade to, so if we get down to 83.23, get a nice risk reward up to 85.68 is something that we'll definitely be looking to take. And the pound yen's exactly the same. It's got a little bit further to go. We'll be looking to take this to the short side up until we get to that level if we get a break of this consolidation. But eyes will definitely be on the 167.78, where we'll try to get long if we get the opportunity. And finally, the CAD yen, no surprise there. That's also been trending downwards very, very strongly for the past sort of 6-7 weeks now. But we are coming up to a strong supports level at 90.23. And if it gets down there, we get the opportunity to get short. We get the right sort of price action. To get long. If we get the right sort of price action, we'll definitely be looking to take this to the long side. Eyes will be on the 92 spot 53 level as a potential profit target, but we'll just have to see what happens when we get to those levels. Okay? So thank you very much for watching this week's Forex Focus. I hope you enjoyed the content. I hope you found value there. Remember, this is for educational purposes only. We're not saying that you have to take any of those trades. We're simply giving you our analysis and talking you through what we're looking to do with our portfolios over the coming weeks and months. If you like this video, please give it a thumbs up below the video. Feel free to post a comment and also subscribe to the channel, because if you subscribe to the channel, you're going to get these videos every single week coming directly to you. You won't have to go out there and search it, and you won't miss a single episode. So thank you very much for watching, and until we speak next week, good trading, have fun now, and take care.